We sure as hell weren't no choir boys, but they did call us the church committee. And it ain't no secret that this is Professor Mark's weekly stock market jobber report. But if you tell anybody, you might end up getting yourself killed.
All right. Well, hello everyone. Thank you for checking in with this week's Stock Market Jobber weekly report, where we go over things about our history and where we talk about what's going on in the market and what may happen and what market principles you need to pay attention to. So I hope our guest's appearance here doesn't get me killed. I mean, I don't know. These CIA guys, they could be pretty messed up. But anyway, market principles. All right. Now, as someone who spent more than 2 decades in the institutional trading world, I can tell you without a doubt that the best traders just focus on simple principles. They don't have magical systems they use. They don't use things like Fibonacci theory and Elliott wave and Gann theory. What the best traders do is they focus on what levels, price levels are important, what's the trends, and what's the momentum and what's the psychology. That's it. Levels, trends, momentum, psychology. If you pay attention to those and you learn about them, then that's going to be your way to become a successful trader. So, one of the basic principles of markets is that some price levels are more important than others. It's just how it is. And you can see this on pretty much any chart. And you're going to see a lot of it in the next whatever time it takes for me to do this presentation. These are called support and resistance levels. So at a support level, there's more demand than supply. If a market's heading lower, it's because there's not enough demand or buy orders to absorb all of the supply or sell orders. So sellers are forced to offer their shares at a discount, and this forces a downtrend. A resistance level is the exact opposite. There's more supply than demand. If a market is trending higher, it's because there isn't enough supply or sell orders to fill all of the demand, or AKA buy orders. So buyers are forced to pay a premium, and this creates an uptrend. So when a market's trending lower and we get to a support level, well, it tends to stop going lower and it possibly reverses or at least pauses, because now at a support level, all of a sudden there's enough demand to take in all of this supply. At a resistance level, there's more supply than demand. So when a market's moving higher and it gets to resistance, it tends to stop moving higher because now the buyers can buy all they want to. There's enough sellers at that level to fill all of their orders. So levels that were resistance can turn into remorse. Let me restate that. Levels that were support can become resistance because of buyer's remorse. There's investors who bought at the support level and then the price goes lower. A lot of these investors say, I made a mistake. I regret doing this and I want to get out, but I'm only going to get out if I can break even. So they wait for the market or the stock or the crypto or whatever it is that they're trading to get back up to the level they bought it at, and then they try to sell. So if you have enough of these remorseful buyers placing sell orders at the level that was support, the level that was support can turn into resistance. Now we have the opposite as well. The levels that were resistance can become support. This is because of seller's remorse. People sell, the price goes higher. I mean, you might have experienced this firsthand with both of these. I know a lot of I know a lot of people have. But anyway, someone sells, the price goes higher. They tell themselves they made a mistake and they want to buy their shares back, but they're only going to do so if they can get them at the same price they were sold at. So if you have enough remorseful sellers placing buy orders at the level that was resistance, the level that was resistance can convert into support. Now, sometimes these important support and resistance levels can stay intact for weeks, months, years. I mean, you'd be surprised. We call this market memory, all right? And we can see these principles on almost any chart. So just remember, just to kind of sum up here, at support levels, there's more demand than supply. So markets stop going lower generally when they get to a support level, or they at least pause, and a lot of times they reverse. At a resistance level, there's more supply than demand. So when a market's going higher and it gets to a resistance level, it tends to stop going higher and possibly reverse or at least pause. So let's go through the S&P 500 and the 12 sectors, the 11 sectors that it is composed of. By looking at the different sectors, we can get a good idea of where the S&P is probably going to go. Also, by looking at the sectors, we can come up with a lot of trade ideas. Like if we see a sector that is really oversold and at a support level, well, within that sector, there are going to be plenty of trading opportunities on the buy side. If something gets overbought and gets to resistance level, well, you have to really understand that when we're looking at these sectors, we're looking at an aggregate or an average of what's in the sector. So just by definition, there's going to be things that are more overbought, more oversold, closer to heavier resistance, or a lot of support. Now, overbought means something has been bought very aggressively, and it's gotten above where its typical or usual trading range would be. And this is important because it draws sellers into the market who are going to be expecting a reversion or a move lower. When something is oversold, it's the exact opposite. Something's been really beaten down and sold aggressively, and that's going to draw buyers into the market because they're going to be expecting a reversion, which means a move higher. So, not surprisingly, we've been looking at this 416 level, if you're a member of Stockmarketjobber, and where did we stall out? 415.93. Now, once again, you don't need to be a chart guru to see this, right? Or a former hedge fund trader. Resistance, resistance. This is a little bit of market memory. Why would there be resistance at a level that was resistance before? Well, it has to do with investor psychology. There are people who bought up here who regretted doing so when the price went lower, and they tell themselves, if I can get out at break even, I'm going to. So when it gets back up to the level they bought at, they place their sell orders. So this is a little different than support becoming resistance, but it's kind of the same principle. We're looking at market psychology. Everything we look at a chart needs to be viewed through the prism of market psychology and what does it tell us about supply and demand. 98% of the time, when what you hear on CNBC or Fox Business News or whatever media you listen to or chat room you're in, when they talk about why the market is moving, they're completely wrong. They have no idea what they're talking about. They try to make every little move seem to have some kind of serious or ulterior fundamental reason behind it. Oh, Jerome Powell said this, the market's up on that, market's down on what Janet Yellen said, blah blah blah. The vast majority of the time, these moves are just investor psychology and changes in perception. All right, what made the S&P move up this past week? Well, these past 3 days or 2 days, I should say, aggressively. Well, I don't know. I mean, did the economy grow that much? No, the economy's actually slowed down. It's investor perceptions, psychology. That's what you need to understand if you want to make money. Now, here's our technology sector, which is the biggest sector in the market. And we can see once again, a level that was resistance became resistance, and that's where we stalled out on Friday. So this week going forward, we got to watch this 151 level. And we can see here the 144 level was resistance and it converted into support. That's seller's remorse. People sell and they tell themselves they're going to buy their shares back when the price moves higher. And if there's enough of these remorseful sellers placing buy orders, the resistance level becomes support. Now, this is an important thing to understand, and this is a good way to make money when you trade. A lot of times when we get to resistance or we get to support, we tend to bounce. Why is that? Well, resistance is a large group of sellers or investors who want to sell at or around the same price. When these investors notice that the price isn't going higher anymore, they just assume correctly, oh, gee, the price isn't going higher anymore. That means there must be other sellers around. So they start to worry that they're not going to be able to sell because someone's going to undercut them in price and the buyers are going to go to whoever has the lowest price. So they start to each undercut each other and it starts a snowball effect. Now, coming off of support is the exact opposite. There are people who want to buy, and when the price stops going down, a lot of these investors start to think, all right, the price isn't going down anymore. Maybe there are other buyers around, so I better increase the price I want to pay. So the sellers come to me because I'm willing to pay the best price around. So when we get to these important support and resistance levels, we tend to make moves. Like look at it there, resistance. So when things get to an important price level, support or resistance, it's time to pay attention because we're looking at probably a tradable move.
The Church Committee was a U.S. Senate committee in '75 that investigated abuses by different agencies, you know. The normal ones, the CIA, NSA, FBI, IRS. But boo fucking who, right? Who cares, right? It's just America. It's the way they do things. It was chaired by Idaho Senator Frank Church. The committee was part of a series of investigations into the intelligence abuses in '75. The Year of Intelligence also included its House counterpart, the Pike Committee, and the President Rockefeller Commission. The committee's efforts led to the establishment of a permanent U.S. Select Committee on Intelligence.
Um, all right, dude. Yeah, okay. That's cool. All right, whatever. All right, everybody, let's just continue to move on. Hopefully, the CIA is not monitoring me now. Here's our healthcare sector, second biggest sector in the market. Now, look at this 133.50 level. It's been important for a year now, or almost a year. It was resistance, it became support, it became resistance, it became support, and it became resistance. Once again, remember, support becomes resistance because of buyer's remorse. Buyers are trying to get out at break even. Resistance can become support because sellers are trying to buy their shares back at the same price. Look up here, this 142 level. Resistance here, resistance here. It's market memory. Here we have market memory on the support side. Support here, right at the 120 level. So you got to know where these important levels are if you want to be successful. It's pretty much that simple, at least in my opinion. Here's our financial sector, and we've got more bad news in the banking industry. So be probably kind of a tough task for the financial sector to get through this support. See, support becomes resistance. I mean, I'm sorry, resistance. Support becomes resistance. What we're looking at here is the SPIDER ETFs. SPIDER is Standard and Poor's Depository Receipt. All right. And these ETFs are designed to track the sectors. There's 11 sectors. Now, when I first started doing this a long time ago, ETFs didn't even exist. So it was really hard to get charts on different what the different sectors were doing. But with these ETFs now it's easy. So if you get a good idea of what's going on in the sectors or beneath the hood or behind the scenes, so to speak, it can give you a good idea of where the market is going to go, meaning the S&P. For example, and it's never this easy, but just hypothetically, there's 11 sectors. One of them has been plowing ahead and it's really overbought and it's at resistance. Well, that would make the S&P or SPY go higher. If we realize, all right, well, the one sector that's been driving it is overbought and at resistance, well, there's a good chance that the market reverses. So we're looking at um, the underlying internals, I guess would be the right name for it. All righty, so let's go to our next sector. Excuse me.
The most shocking discoveries of the committee included the exposure of our drugged and torturing of unwitting U.S. citizens as part of human experimentation on mind control, and our surveillance and infiltration of American political and civil rights organizations. We've been at this a long time. Also, they found out about our program to covertly assassinate foreign leaders, a systematic campaign program with propaganda with domestic and foreign journalists operating as CIA assets and dozens of U.S. news organizations providing cover for CIA activity. Wonder how that happened.
Wow, dude, that's pretty messed up, man. I mean, you guys are like, I don't know, pretty hardcore. Now, here's our consumer discretionary sector. It's just been consolidating or trading sideways. But we could see some of our principles here. Resistance becomes support. All right, let me just kind of move ahead here because now I'm a little worried. I don't want the CIA tracking me. Look how clear this support level is in the industrial sector. Look how clear this resistance is in the industrial sector. Now, once again, why is it important to know this? Well, when things get to support or resistance, they tend to make a reversal, like here or 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 here, right? These were all trading opportunities. Things that get to support tend to bounce, things that get to resistance tend to sell off. It's really just that simple. And it's because, like I said, when we get to resistance, sellers start to get concerned or anxious that they're not going to be able to get their orders done. So they undercut each other and it starts a snowball effect. When we get to a support level, it's the opposite. The buyers start to get anxious or worried that they're not going to be able to buy their shares, so they start to pay higher prices and it becomes a snowball effect to the upside. And I mean, you can see it on pretty much any chart. Why did this industrial sector move from 97 to 100 in 2 days? Well, investor psychology. It's not that the sector itself increased by however many percent that is, 3+%. It's that investors' perceptions have just changed. Again, 98% of the time, what they're saying in the media about why a market is moving, they are wrong. Most media people are journalists, they're not former traders, so they don't really understand how the markets work, even though they think they do.
Hit on Project Shamrock. This was when the major telecommunication companies shared their traffic with the NSA, while officially confirming the existence of its signal intelligence agency to the public for the first time. Well, we're the CIA. What the fuck do you think we do? This is what you pay us for. What you don't know you pay us for, all that black money we got in the black books. You don't know nothing about that money. The money that goes to Iran, the money that goes to Afghanistan warlords, the money that goes all over the place. Nobody knows nothing about that. That's the stuff that nobody can account for. That Pentagon accounting that's messed up, yeah. That's where that money went. But don't worry about that. That you got enough. You guys got a great domestic product in America. You keep it pumping out. Keep pumping out that cash. That tax money keeps coming in. We keep killing more people and buying more shit.
Oh, remember that dude? What was his name? Edward Snowden, right? What was he in the CIA or the NSA? Like, he joined and then he found out they spied on people and he got all upset. It's like, dude, what the hell, man? It's like you joined a spy agency, right? Like, you're surprised that they spy on people. I mean, like, what are you, a complete freaking idiot? All right. If you join General Motors and you find out that they're making cars, are you going to be shocked? Well, anyway, regardless. Now look at here. Resistance, resistance, support becomes resistance, resistance becomes support. We're at resistance again. A lot of people say, oh, you spend so much time talking about support and resistance levels. Well, guess what? That's what trading is. It's knowing where the price levels are, where things are going to change or move off of. I mean, I could tell you, oh, let me do a class on Fibonacci or let me do a class on Gann theory. Well, guess what? In the institutional world, no one pays attention to that kind of stuff. It's like science fiction. Just remember levels, trends, and momentum. So we're at resistance, resistance, resistance. Overbought. Overbought securities that get to resistance tend to sell off. So there's probably going to be some profit taking within the consumer. Well, I mean, there's probably going to be some profit taking within the consumer staples sector, right? Overbought things that get to resistance tend to sell off. The overboughtness draws sellers into the crowd who are expecting a reversion, and a resistance level is a group of large sellers. So you got the double whammy. You got the group of large sellers and you got the overboughtness. So you have a lot of investors who want to sell around this level, and you have the conditions that are going to draw sellers into the market expecting a reversion back to the mean, which in this case would be a move lower.
See, most people think that if you're in the CIA, you must be extremely intelligent. Most people think that if you're rich, you must be extremely intelligent. Well, I'm telling you folks, they're wrong. Down there, here's a couple of folks there at the bottom. You know what? I don't even like saying that guy's name. And this chick, oh, golly.
Well, there's an old saying on Wall Street, and maybe it happens in other places too, but it's better to be lucky than to be smart. All right, XLE, this is our energy sector. Got to support, we rallied off of it. Support becomes resistance, resistance becomes support, resistance. So resistance here became support here. It's all about the levels. I mean, certain levels are more important than others. Sometimes we know why, sometimes we don't. But that's one of the principles of financial markets. And if you understand these principles of which price levels are important, because some price levels are really not that important for depending on your time frame. Like, why did this find resistance and support at 83 and not at 82 or 84? I don't know. I mean, I really don't, but I don't need to know. We just want to know where they are. Levels, trends, momentum, and psychology. What we're looking at is psychology. Psychology is buyer's remorse turns support into resistance. Seller psychology is seller's remorse turns resistance into support, and so forth and so on. So if you view the market and charts through the prism of what does it tell us about supply and demand and what does it tell us about psychology, that's where you're going to start to understand how to get a feel for which way the markets are going to go. And here's our utility sector. Once again, we can see support becomes resistance. We have support down here. Support remain support, resistance remain resistance. Support becomes resistance. You can see it on pretty much every chart, I would think.
I know a lot of you pikers complain because you don't understand trading and you're a little bitch that wants to be told what to do. So I guess Professor Mark doesn't give out exact, precise ideas, and supposedly he wants his students to actually learn. Imagine that fucking novel prospect of people actually he wants his teaching to be absorbed and used by his students to become more financially stable on their own right instead of him giving them picks. Well, what the hell? But yo, if you got some real money, you can shoot meat then, Lodge. I'll get you some of them ideas, motherfucker. Where you want to meet at? You want to meet behind the dumpster here after class? FYI, this is just a little sarcasm. Please don't contact Mark looking for secrets. It says his ideas are completely available to all community members. Pay attention, get your notebooks. Mark's got stuff to teach you.
Man, I don't know, dude. That's pretty messed up. I mean, you guys do a lot of messed up stuff. So please cut me some slack. I'm a somewhat law abiding, but definitely a patriotic citizen. And my tax dollars pay your salary, blah, blah, blah. Anyway, look at this XLB. This is our material sector. Back to this important 81 level. This is a 2-year chart. This is a good example of market memory. Support, support, resistance, support, and now it's resistance again. All right, and then just to end it up here, hopefully the CIA will. If I'm not there on Monday, it's because the CIA came and abducted me. So this is our real estate sector. Resistance becomes support. Support becomes resistance. Support becomes resistance. Now we're back at resistance again. All right, so here's me. I was literally an actual market maker. I was literally an actual institutional trader. I was literally actually the head of trading at about different hedge funds. So I've been around the block a few times. So I would, I think I can kind of speak with authority what really goes on in the institutional trading world because I was there for more than 2 decades. All right, everybody, thank you so much, and I hope to see you soon. Thanks for being a member of the Stock Market Jobber community.